let's kickstart the show by talking about the new kid on the block, digital public infrastructure provider Protean eGov Technologies, listed at 792 rupees a piece. This is pretty much what the issue price was as well. Remember, this is a 490 crore rupee offering, and it was entirely an OFS. So to discuss more about the listing, the plans ahead, we're joined by the management. Suresh Sethi is MD and CEO of the company, and he joins us now to take some questions. Mr. Sethi, thanks a lot for joining us. We just had you on a few days ago, and of course, we were talking about, what the business really looks like, how you get your, share of the revenue. But we weren't, of course, able to talk about the numbers too much. So if I can just come to that right now, last year in FY23, I think you did just shy of 750 crores in terms of the revenue. Considering the kind of growth plans that you were talking to us about last time, what do you pencil in for the full year this time around?
Thank you very much, and thanks for having me here. So as I said, as we are diversifying, I think the focus of the company is to now grow into the new areas that we've invested in. We are a company which has got 3 large businesses today as we speak in the space of taxation. We run the largest central record-keeping agency for pension schemes, both the National Pension Scheme and Atal Pension Yojana. And we have a significant business in the space of identity services, built on top of Aadhaar stack and the Aadhaar database, and also validation services we provide on the back of the PAN database that we maintain. And the company as such has taken a call to diversify into multiple sectors of the economy where open digital ecosystems are getting created, be it mobility, be it digital commerce, health, agriculture, education. The second pillar on which the company is putting its growth vectors is in terms of identity services and building the complete vertical stack on top, both in terms of data and allied services, where we are also leveraging our account aggregator license. And here we are looking at enabling digital lending, onboarding journeys, data analytic models and propositions. And last but not the least, the company is looking at cloud services and infosec consulting. So we are diversifying from a 3 to a 6 stack business model. The other area the company is focusing on is looking at taking all 6 lines of businesses into global markets, especially developing countries where digital public infrastructure is at a nascent stage. And for us, the company has pivoted in more than one ways, from being an infrastructure provider to providing consumer and corporate tech and products, to looking at geographic expansion, and also to build models around data and data analytics. And that is where we see the complementarity and the adjacency coming in for the company as we move from more commoditized infrastructure level services into more specialized and value accretive services in the layers on top, which in our parlance today we call the infra layer and the innovation layer in the country, as we look at a layered approach to building of digital public infrastructure.
Mr. Sethi, hi, good morning. Season's greetings to you. Wish you a very happy Diwali to you and your entire team, and a happy new year as well. We got that. We understood
Thank
that. Thank you so much. The transition that is underway. Now, please help us translate this into what it could mean for both top-line growth, not just in FY24, but the profile of top-line growth as you look at the next 1 to 2 years, as well as profitability and margins. If I look at top-line growth, I mean, from FY22 to 23, the addition was about 50-odd crores. Previous year, the addition was just less than 100 crores. So, can we expect, with so many new verticals coming in, can we expect a significantly higher profile of the top line? Let's discuss top line, and then I'll come to margins.
Yeah, sure. So one area I definitely would not like to put a quantified forward-looking statement. But clearly, the point I'm trying to indicate over here is that there's a lot of adjacency. And for us, the company has built a business model where we are evolving from providing, say, infra-level services, which always come in as low margin and high volume services, because these are, end of the day, B2C services, business to business services, where you are enabling the consumer, you are enabling the corporates. We are moving into a space where we are leveraging our infrastructure level competencies and investing in people, in technology, to actually contribute at the innovation layer level, where you definitely see more value addition. For example, from providing an infra service like an e-sign and an e-KYC, you move into a space where you provide, say, a financial institution an end-to-end digital onboarding journey. So these are value-added services. You bring in artificial intelligence, you bring in UI and UX to come into play over there, and therefore you command a different set of margins over there. So we are seeing there's huge complementarity of the new lines of businesses we are getting into, and that is what we expect would play well for the company as we build a synergistic strategy with complementary lines of business, both domestically and also what we are trying to do in the global markets.
Absolutely. Yes, you mentioned that you're looking to aim at the export markets quite a bit as well. So as you get into some of these newer lines of business, for instance, ONDC, online commerce, etc., what can be this new margin profile? I mean, I'm not asking you to put out a guidance for the year ahead, but in general, you're operating in this, anywhere between 15% to 17% band last couple of years. So these newer adjacent businesses, what is the profile? Can you look at, say, 20% in the next 1 to 2 years?
So let me put a different perspective here. Yes, you're absolutely right. Areas like ONDC are definitely going to be transformative for the country. Today, we have a single-digit penetration or low single-digit penetration of digital commerce in the country. Interventions like ONDC, which are about democratizing e-commerce so that all market players have the ability to participate in a decentralized network. That is where today we are providing the building blocks of ONDC on which the entire discovery is done between buyers and sellers. So we are playing at an infrastructure level. So all transactions go or are passed through the technology we provide in the network. Similarly, we are contributing at the level where you are market making. You are creating consumer and corporate tech and enabling buyer applications and seller applications, which is where the value added journey comes in. So I think for all of us, the interesting point is that today there's a huge macroeconomic opportunity in this case. And these interventions are what will help achieve the trajectory going forward. And we are today contributing both at the infra and the innovation level. So the company will have a revenue model which is touching both these aspects. And we will be pretty much a integrated play in the entire sector as such.
Okay. All right, Mr. Sethi, we will leave it on that note. Thank you very much for joining in. We will take a quick break on that note. When we come back on the other side, we will talk about some of the key index movers. Eicher Motors, Coal India and Hindalco all in focus on the back of second quarter earnings. We'll get you more.